In this video, we'll discuss about financial performance forecast for 2024. During 2023, the financial market performed excellent with S&P 500 gained 24.2%. But what was funny that most of the financial analysts, the well-known banks, well-known financial institutes, most of their analysts, they got it wrong. They were very bearish. These analysts, they were getting paid millions of dollars, managing billions and billions of dollars. Why they could got so wrong in terms of forecasting the market performance during 2023? So in this video, we'll discuss all these different dispersions, all the different banks, what kind of targets forecast they had during 2023, and also what they have been forecasting for this year in 2024. So we're going to discuss various banks, their opinion, what kind of target numbers they have been putting. Hopefully this will be helpful. Last year in 2023, financial market had an excellent performance. The broad index S&P 500 settled at 4,769 points with a gain of 24.2% this year. It almost reached an all-time high at the end of 2023, just short by a few points. Similarly, Dow Jones Industrial Average closed at 37,689 points on last Friday of the last trading day. It finished the year with a 13.7% gain and notched a new record during 2023. Similarly, Nasdaq Composite Index closed at 15,011 point with a whopping gain of 43.4%, the best year since 2020. So the financial market really performed very well. Both S&P 500, Dow Jones Industrial Average, and Nasdaq. The funny thing about is that the median Wall Street prediction for this last year was only 4,009, whereas the actual gain was at 4,769. So the estimates provided by the pundits in Wall Street, they were really off by almost like close to 20% or something. It's really very small amount, a big amount. So how did the Wall Street people got it wrong? They get paid millions of dollars basically for forecasting market performance. What went wrong? And also, I would like to show you during S&P 500, the forecast in 2023, there were like many of these banks or financial companies, they're very bearish. Some of them were neutral, some of them were like, mildly positive, and some of them were fairly bullish. So I have put down the names here, especially like on this, last column, you can see this Barclays. They are they're very bearish, starting at their forecast to a 3,670 point. Similarly, Society General, Capital Economics, Morgan Stanley, their forecast in 2023 was 3,900. UBS estimate was similar to Morgan Stanley. So is Citibank. BlackRock had like a couple of points higher to 3,900. So they're like really like even below 4,000 their estimates were, whereas the actual performance was 4,700. In the neutral category, Bank of America, their forecast in 2023 was 4,000. Goldman Sachs, similar, 4,000. HSBC, Hong Kong Shanghai Bank, their estimates were 4,000. Credit Suisse, slightly higher, 4,050. Royal Bank of Canada, RBC, was 4,100 was their estimate. And moving forward, the JP Morgan, few of these banks, they were slightly positive. JP Morgan was 4,200. Jeffries was 4,200 as well. Bank of Montreal was a bit higher, 4,300. Newvin Financial, they were similar to Bank of Montreal at 4,300. And on the last column, some of these financial organizations, they were somewhat bullish. Oppenheimer, they were at estimate was at 4,400. Wells Fargo is in that range of 4,300 to 4,500. Deutsche Bank similar at 4,500. CFRA Research 4,575, and Luthert Group, their estimates were at 5,000. They were higher than actually like the real S&P numbers. So as you can see, there's a big dispersion amongst these Wall Street communities in terms of forecasting 2023 the performance, S&P 500 performance. So what really this much of difference was there during 2023 that they could not forecast very well. There are a lot of things going on. There are a lot of cross currents in financial market. The inflation was very high. It was very rampant at one point during 2022, 2023 was at like 7, 8, 9%. All these people, there are a lot of concerns about looming global recession. Then also rising interest rates. The Federal Reserve started rising interest rate very aggressively at a couple of points, starting with 25 basis points all the way checking up to 50 basis points and 75 basis points. So the market was concerned that the households' buying power is going to be sapped out as you keep on raising short-term interest rates. Seemingly, even corporate profits were denting. That's what the market was very concerned, that if you keep raising interest rates, the profitability of all these companies are going to be going down. And also in the middle of the year, there was a severe banking crisis. Two of these bank, Silicon Valley Bank, First Republic Bank, they went bankrupt. So that really shook up the confidence in the financial market. So there are a lot of sell-off happened. And also there is a war going on basically in Ukraine and in the Middle East between Israel and Palestine. Those are all negative for the stock market. And Chinese economy was really slowing down. Their real estate sector and basically the government policy sudden reversal. They were concerned, and their economy was slowing down. Chinese economy was growing at very fast rate, double-digit growth, then coming down to really 3-4% range. So looking forward in 2024, I have basically read up about all these different banks who were really quite a bit off from the actual prediction during 2023. So they have come up with 2024 forecast. Bank of America, RBC, and Federal Homes Analysts set S&P 500 prices targets at 5,000 at the end of the year 2024. Admittedly, these companies are modestly bullish, with a projection of barely 5% rise, 5% raise in S&P 500 target in 2024. Couple of other banks like Goldman Sachs, Deutsche Bank, and Bank of Montreal, they're a bit more upbeat. Their analysts are in these three companies. They put the S&P 500 targets in 2024 to be at 5,100, which will be a 7% gain from the index in the current level. And other organizations like Oppenheimer, their chief strategist John Stofus, he looks at his things like a new bull market is starting. In S&P 500 targets, he put it at 5,200, which should be a 9% gain from the current level. So these are like somewhat bullish, but there are a couple of these people, they're still fairly negative, especially like JP Morgan's Marco Kalanovic and Dobro Lakobujas. They are notably bearish, and they wrote to their clients saying that we expect a more challenging macro backdrop for stocks next year, softening consumer trends, and investor positioning sentiment have it's reversed, and they put a S&P 500 target at 4200, which should be 12% below the current level. They are bearish, meaning the market is not going to be doing well this year in 2024. Morgan Stanley, they were also in the bearish camp, and their S&P target is at 4500 points. Most moderate decline, which would be like 6% decline. They still expects their analysts, they expect average earning growth among S&P 500 holding is going to be around 7% or more for this year. And Stifle strategists, they are fairly like bearish. They say their clients saying that the S&P 500 market is going to have a range bound market and continue during the all the way till like next few years, and they put the S&P 500 targets to be at 4650, which probably would be a decline of 3%. So as you can see, many of these like banks, they're somewhat bullish, and some of them are very bearish. And I will put the targets, all these well-known banks, what their targets in 2024. JP Morgan, their target is at 4200, which is basically lower than where we are. Similarly, Morgan Stanley's target is at 4500 for S&P 500. Wells Fargo Securities at 4625. Jeffries numbers are 4700. UBS 4700. RBS capital market 5000. So that would have been higher than where we are right now. Bank of America is similar, 5000. Citibank is a bit higher, 5100 points. Deutsche Bank and Goldman Sachs, they are at 5100, their target at the end of this year. So that would have been about say 7%. When you go to like 5100 range, that would have indicated S&P would raise by 7%. For myself personally, I have been listening to Tom Lee from Wal Street Global Advisors. He has been his prediction has been very accurate, actually very close to, throughout the year, his prediction has been very close to where the market realized in 2023. I think his targets were around 4,800, which is the closest I could see. And his forecast, looking forward in 2024, he feels that there is a 50% chance that the market S&P should have a double-digit growth in 2024. He thinks that the economy is really like slowing down, and then other factors like the housing markets and car prices, etc., they will all come. So the inflation will get to the target of 2%, and then Fed will start cutting interest rates next year, and economy generally is in good shape. So the market is going to do, and the earnings are going to be also pretty good. So the market should perform better. So this is what basically these various banks, various organizations, their analysts, their opinion has been regarding how the market is going to behave in 2024. Hope you like this video, and if you like, please do subscribe, and also if you have any comments, I would appreciate it. Thank you very much, and Happy New Year. Hope all you will have a very prosperous New Year, healthy New Year in 2024. Thank you very much.